Ford Motor went down 18% today after they announced their earnings. Wow, what a big drop. I expected to see some really bad news in their financials, so I reviewed them carefully. And I wanted to share with you what I discovered in that review, and I wanted to share with you my updated analysis on Ford. I'm a current Ford stockholder. I own about $20,000 of their stock, and I'll make a decision whether I should buy more shares, just hold, or just sell my shares and get out of this position. An 18% drop is really big. It really catches one's attention. And I really went into the earnings thinking, I'm probably going to read something that's really, really bad news. I'm going to reveal what I discovered. I think there was a little bit of bad news in the earnings, but a couple of surprises that really don't match up with an 18% drop. So I'll go over that. Ford is a company that I think everybody knows about. They've been around for more than 100 years, and they've been really successful in selling internal combustion vehicles, as well as very successful in their commercial business, selling to people that need, industrial strength trucks and vans and so forth. They have a really good van that a lot of tradesmen use, and that's been a really bright spot for the company, their commercial business. The consumer business is doing great. They have a good lineup of cars. I think they're very desirable, going from the Bronco to the Explorer and other vehicles that they produce. I think the company has a very good lineup. I wanted to go through and take a look at their financials, then look at their fundamentals, look at a valuation that I'll provide for the company, then make a decision whether I should buy, hold, or sell Ford stock. So let's take a look at the earnings release. To begin with, the company grew their top line revenue. That always looks good, that the company is growing the amount of revenue they're bringing in. In addition to that, the number of units sold was higher in the quarter than it was the same quarter compared to last year, as well as the first half of the year. They're doing better than last year. That looks good. The cash flow is better than expected. In fact, they are raising their guidance for free cash flow for the year. I was using the low point of their previous guidance, which was 6.5 billion, but now it's going to be 7.5 billion or higher. It's a very good free cash flow rate that I'm going to be using in the valuation. The best part of Ford has been the pro business. The pro business is really the part of Ford that sells to small businesses or tradesmen, people that need a really durable truck or van to do their jobs. And they did really well in that area. That's where they got most of their EBITDA, and that's where they're doing the best. The traditional cars are also selling well. Their EVs are not doing great. They lose a lot of money with that business. You can see that's where they lost most of their margin. But they do have the number one selling electric vehicle for trucks. They have the number one selling truck that's fully electric. So that's something to say. Overall, I think that, 18%, I'm not seeing an 18%, drop here. I'm seeing that maybe the market was disappointed that they had an increase in costs when it comes to warranties. That's understandable. But what about the growth in revenue? That's good. What about the increase in free cash flow? That's excellent. So I'm not quite understanding why there was an 18% drop. And I just shake my head because I don't understand it. The market has been selling off. Google, as an example, announced 2 days ago, they're down 8% if you measure from the time they announced their earnings to now. I think Google did quite well in the quarter. They grew their revenue by 14%. They were profitable. They did really well. And their stock dropped, along with Meta and along with a lot of great names. So maybe the market's just selling off. The market had been expensive, and it's just selling off, and it's looking for any excuse to do so. Maybe. Looking at the fundamentals, Ford is a $43 billion company, and that's a market cap company. The revenue is $180 billion. So you're paying a fraction of sales for the company if you look at their market cap. Their PE is at 11.6. The Ford PE is 5.48. It's ridiculous. It's so low. Very nice dividend at 4%, and they can afford that dividend rate. They produce a lot of free cash flow. Analysts have a nice, healthy discount assigned to this stock. They think it's a good buy, but it really had a bad day, to say the least. It had been rising lately. You look at the rise that it started right around the middle of June. It really rose nicely, but it's lost all those gains and actually established maybe one of the low points for 2024. And that's the story of stocks. Sometimes stocks have momentum. Sometimes they don't. Sometimes the stock market hates a stock. Sometimes the stock market doesn't understand a company. That may be in play here for Ford. If you look at their revenue, we're looking at the annual, they've been growing their revenue. That's a sign of a good company. When you grow your top line, that means your business is growing. Customers like your cars. You're making something that the market appreciates and will buy. So that's a good thing with regards to Ford. And their free cash flow, which is one of the main fundamentals that I look at, it was good in 2023. And the guidance they're giving us is that it's going to be at least $7.5 billion. So I really like that number, and I'm going to use that in my valuation. Analysts, and I don't know that they've updated their analysis. 14 analysts cover it. This is before they had an 18% drop. Some analysts are saying, hey, this is a $20 stock. Some say it's a $10 stock. On average, they're saying it's a $14 stock and it's discounted by 28%. They're saying that the earnings per share this year is expected to be $2.04. And it's really, I'm going to use kind of a very low growth number because you can see the next 2 years, there's not going to be much growth. I'd rather just be conservative with that growth rate. I'll use a number just slightly below $2 per share in my valuation using earnings per share. Looking at the valuation I have for Ford, I'm going to value Ford using free cash flows based on the new information that they provided in their financials, as well as earnings per share. The new guidance for free cash flow is they'll do at least 7.5 billion, which is a very strong number. They have shown that they're growing their free cash flow, so I'm going to grow it by 7% in years 2, 3, and 4. Then terminal value, I'm going to grow by 3%. That's a nice growth rate for a car company. I'm going to use a discount rate of 9%. They have a good balance sheet, but I want to be conservative. This is a car company, and there are risk factors associated with this industry. Cash is a nice, healthy 34.5 billion, and really the net debt, because Ford does provide financing to customers, I calculate to be $43.5 billion. When I add cash, take away the net debt, I get to an equity value of $120 billion. But the company has a market cap well below that, $43.7 billion, has a stock price of $11 per share. But I calculate that each share is really worth $30 a share if you look at free cash flow. So there's a huge, huge discount if you look at the amount of cash flow that Ford is producing. Now, earnings per share, I'm using a more conservative rate for earnings per share than is being forecasted by most analysts. And I'm glad I'm doing so because I want to be conservative. I'm going to use a 12 PE. This is a growing company. Top line is growing. I don't understand why their PE is so low, but I'm going to use a 12. I'm not going to grow earnings per share into the future. And I get a stock value of $22.92. Stock is trading at $11, so there's about 105% discount on the stock using earnings per share. Just overall, this is a very misunderstood stock. It's producing a lot of value. It's a very well-known company. It's just not desired by the market. The market does not like car companies right now. Tesla is somewhat of an oddball. It has a huge valuation, but it was down this week. So maybe that kind of set the table for car companies because Ford is selling off, General Motors sold off, Tesla sold off. Maybe it's just the market just doesn't want car companies. So what should I do with my Ford stock? Should I sell it off and just get rid of this dog, so to speak? It went down 18%. Should I just hold it and wait for a better time to sell it? Or maybe it might respond and recover quite quickly. Or should I buy more shares? And looking at the company, I mean, I see a lot of value there, but I've been seeing a lot of value in Ford for some time, and the market hasn't agreed with that. I think that I'm going to hold my shares. I'm not going to sell them and just see if the market sentiment for car companies changes. For all I know, they catch a little luck with the election coming. The politicians tend to really put incentives out there. Like right now, they have an EV incentive that's quite lucrative, $7,500 to use towards a car. If you use it right, you can get a lease on a car like an EV from Ford. It has to be assembled in the United States. And it becomes a very attractive purchase price on a car. So politicians may give Ford a really nice tailwind. We'll see. For now, I think it's worth just keeping in my portfolio. I'm operating at a small loss on the stock. I was at a gain, but after an 18% drop, I'm at a net loss. So we'll see if that can recover. It looks like the stock in after hours trading is up a little bit. We'll see where it goes tomorrow. The market is selling off. So for all I know, the market's going to keep selling off for another week or two or a month. And then we'll have to figure out what I do with my capital. So that's my video on Ford. I'm going to hold my shares and not do anything for the time being. I hope you found my video interesting. Keep in mind, I'm not providing any financial advice. I'm not recommending you buy, hold, or sell Ford stock. I'm just sharing my experience as an individual investor. And I appreciate you watching. Have a good night.